Okay, we are going to start now. The time is 8, no, 8. Timetable is given to you, no? Starting at 8. So, I know that in the last time also, they are coming at 8:30 somewhere, right? But we need to start on time, otherwise, we will not be able to finish this post content fully. Right? The time is very, very important. Right? Your time and all the time. Right? We are not utilizing the time effectively. That's the case. Country also, right? Yeah, think about the being better, right? Time management is very, very important. In your studies also, you need to manage your time, properly. While you are working, right? You need to manage time. You need to have some kind of allocation for your studies. Most of you are working, all of you. Anyway, okay. It's recording, right? Anyway, we start the session, right? So before now, I have uploaded the materials to you. Midnight yesterday. So I'm not repeating the course of details. You know, right? The areas that we need to cover, right? You know what is this, right? So these are the principles of economics, right? So my name is Satma Sethi. I am actually attached to the Wambo University, Department of Banking and Finance. So I'm the professor in the department. So actually my field is somewhat blended. Strictly actually basically management side, but uh, even actually after that I specialize in economics. So because my interested area is economics. Economics is a very interesting subject. Right? Now usually in these days, right? So the important of economics. So we are in the university in the last 2 years, right? Understanding the economic and application sides in economics. So we are talking always we are talking about economic things, country, economic situation, right? So this is happen, right? What kind of remedial actions we need to bring out the economy, right? So our understanding economics is very much important as a citizen, right? That's what our citizen they will know is very clear. So you are there, right? You educate them, your families, right? Right. You are the people, right, that bring the message to the grassroots level, your families and your friends, other friends, right? So once you study economics, that is important, right? You can understand the real situation, right? Maybe the day-to-day life, especially the decision making, right? Very much important, right? And also if you are making investments, right, savings, here's the thing, that's very, very important. You need to understand microeconomic and the macroeconomic environment. Now, this course, if you refer the course materials, actually the contents, you may understand that we cover both aspects, microeconomics and macroeconomics. It's a blended thing, very, very important as principles, no, right? Even though the study principles, the basic, you will get the basic understanding about economics once you study the principles here, right? Especially the micro environment and the macro environment. That is very much important, right? So, so I want to know about yourself. So my background is economics, and then I did banking. So I'm professing in banking and finance. So my specialty is banking, but so in our university we don't have this separate the economics department, so the I mean as a management faculty. So economics also there. So my interest is very much important and interest subject is economics. So because I did my masters and field in economics and finance. my background. So, I want to know about you yourself. So, do you have any what sort of knowledge you have in economics? Have you studied economics earlier? Advanced level, other courses, most of you have done that. Right? You study. Hands up those who study. Okay, you can tell me. Start from. What's your name? Then what is your background in economics? Very recently? Not recently. Then you found it course in economics as a subject? No. So we have some you study economics. Then next. Okay, okay. You can see. No problem.
In Ireland, I was economy, and also
You are doing economics as a subject.
in Ireland, I'm not good.
Even though you said your name, I can't go. I can't remember. It's even a small number, right? So that's I don't know. Because there are so many students, you know, right? I see that other places, right? All students are easy to come home, right? But very close, if we come to final year, right? Sorry, come to the final year, we very close students and since we interact with the students and projects and so on, right? Then I family some names, but otherwise, nothing. Yes.
And economics in Ireland, and then I have started to follow other technologies.
So you are started which level you are in whole? Okay. So then you study applications and also you study. So where are you working? You can tell me where are you working? Capacities. Then after that, so how about the following the started?
Studied economics in A level. Also the basic economics in A, which comes in level. After that, I completed, yeah, after that, I completed business level.
Very recently we had the manual entry of 18C is in so the younger provisions and what was we have started in sector. So all of they have sound understanding about economy. So then it's easy for me to solve these basic things. Even though I do it here. I need to write that because another part we have some important areas that we need to cover. So we can pay more attention on these areas. So anyway, I will give you some ideas and even I can give you now you have any ebooks given to you or not? Yeah. Have you refer any books previous? What sort of books you refer? Textbooks, study materials, you refer in my syllabus, standards, economics. You have it, and you remember the name of the textbooks that you refer. because now we have the online platform, right? And get anything from the internet, right? So there is, but the reading, right? So you need to read. Yes, right. So I will upload a small book, right? For you to case by case you can refer, you can understand it. That is not the recommended readings you will use, right? So by using the and refer the recommended readings in the live here, right? But that I will upload a video for you to review some areas like. Apart from that, I will now some of the things like yeah, we can go through the things right. You need to take additional reference and additional notes, anything right. Because last time I observed right, when you are writing the answers, right, so just you some kind of elaborative answers you need to give, right. So depending on the marks, no, right? Your content also you need to expand, right? Because at the very beginning I want to tell you, right? So you need to not a very simple one or two sentences writing is not sufficient in economics. You need to elaborate the ideas, right? So mostly we use some techniques. No? In economics, we explain the graphical way. No? We draw the graphs and we say the story behind the graph, no? Right? So if you draw the graph, right, and you say demand and supply, our price is determined, no? There is a story behind that, how it is happening. You need to explore something. Just writing the one or two lines, yeah, yes, definition. To give the only the definition, that's also not sufficient. It must be an exceptional case. Give something, elaborate your ideas on the concept. If that case you write, you will get full marks. Otherwise, you will not get full marks. Even though therefore, when you are writing the things, right, you need to write something right, full way and the related concept. No, you can apply based on your previous knowledge, no, right? Ideas, your own ideas, you can explain, right? Exactly, you need to write your answer. Mostly, you need to write your answers based on the graphical explanations, and you need to explain the graph, and finally, you can focus the questions based on that. So therefore, please remember that most of you have we have the assessment, no continuous assessment, right? You need to get both continuous and the final exam sufficient marks, no? Right? For you to pass the examination. So therefore, final exam also very important, right? So therefore, please remember, right? So when you are, I will give you some tutorials for you, right? You need to write all these things, right? And group discussions, some kind of, like, I want to get your group list also, right? So then we can make the group and you can discuss within your group, right? So those discussions. And some of the assignments I will give you, right? There will be a individual assignment and a group assignment, right? And presentation also there, right? I don't think that we have time to make the presentation. If we have time, based on your presentation, or we probably will arrange the presentation also, right? Okay. So now you know this thing. I am not going to repeat the areas that we cover. That now you can see these things, right? Anyway, first and the areas, micro and macro environment, and this is the uh, agreement, right? Again, you have the group report according to this group presentation, individual report, and also midterm is there, right? Definitely, I will. There will be a individual assignment and the group assignment. Okay, and the midterm is there, right? So that is online test will be given to you, right? So I will. When I explain the lecture plan, right, I will give you where we are and when we are going to have this midterm examination. Mostly, once we cover this microeconomic parts and the macroeconomic national income model up to that level, so basically Keynesian theory model, right? Income determination model, up to that level we will test the MCQ test. Right? So we will cover 2 sessions, right? After every 4 or 5 sessions, right? We will have the midterm test, right? So that's the online test, right? So 20% will be given to that, right? Okay. So even we can talk about this. This is the democratic socialist country, right? So how we given the weightage, right? We can decide it later, right? No problem, right? For the time being, you can keep in your mind roughly 20% allocated for that course, right? Covering the UCA 50%, right? And you can refer the materials to, right? So there are actually the textbooks mentioned here, right? So depending on your, if you have those textbooks, you can read, right? And we can library. And also there is another one covering this unit that positive economics. Lipsy, right? Lipsy about the one, right? An introduction to positive economics. So that also you can refer, right? So because all these areas will touch, right? Jika bikin komponen tadi kan, nanti kita mulai, right? Right. So do you have any questions to ask? Any questions? Okay. Now, so this is the plan, right? So we will now today we have the 10, right? 10 sessions, right? 3 hours each, right? 30 hours will be given, right? And that means two training, this is two training subject, right? 100 portional hours, right? So you need to pay attention on the assignments and the readings, another 70 hours, right? So that is expected. So when you are completing this course unit, right? So now first, now this is the lecture plan, right? I'm planning this way, right? So since we can do the introduction today and the introduction part and the demands of the equilibrium analysis, we start that one also today, right? So now since we have the knowledge in economics, we can go a little bit fast, right? These things, like basic things, since you have some understanding, right? So you can refer some textbooks, right? And on these areas, referring to the main recommended books, right? Okay. And the demand supply equilibrium, you continue the seconds, right? So now you can see the midterm test will be counted, right? First, second, third, fourth, fifth, sixth. Yeah, up to the ISLM model, that is actually we will decide it, right? After the ISLM, we will talk about one theory in macroeconomics, sometimes it will be ISLM. So up to that level, that topic, like basically the national income determination model, up to that level, we will test the MCQ. We will given the 1 hour paper, right? Our 45 minutes. Right? So we need to answer around 40 questions. Okay. Right. So when there will be a second group assignment will be hopefully in the second day, right? And then attention, individual assignment. Maybe I will give you some there is individual assignment also, right? Confusion. Okay. So that is actually certain questions will be given to you, right? To test your knowledge in subject area, right? Based on the question we have, right? So that is individual assignment, right? Okay. So these are the areas we are going to cover, right? First, then the production, then demand supply, then the elasticity and the consumer behavior, and then the difference curve, and we will come to then macroeconomics. Okay, so then we come aggregate demand, aggregate supply, and some policy aspects we look at, right? Policy income, micro, monetary fiscal policies, and then we talk about the ISLA model, right? So that is also important model, combining of overall economic behavior. And then topics employment and inflation. Right? So those are the areas that we are going to cover. Okay? Right. So first we will go to the first. Today we are going to talk about the introduction, right? So these are the basic things that we, at the end of this discussion, right? We get now you have some understanding about the economics. Right? So we can have some kind of interactive discussion this session, and we will cover some basic concepts in economics, like you know the why the economics evolved from ancient time to up to now, right? Those the main subject area and the basic concepts we discussed, right? And then we identify the different factors of production and the problems, economic systems, and different branches in economics, basically micro, macro, and we get some understanding about the evolution of economics or different schools of economics from ancient times to up to now. So those are the things that we are going to plan to cover here, right, under the introduction to economics. Okay. Right. So now, what do you know about the history of economics? So how many years of experience we have in economics? Now, the starting point of economics. You know the starting point from there. So that is, you know, the father of economics, right? Who is the father of economics? Adam Smith. Right? So before that, actually, that was in 1776, right? Before that, there are certain writers talk about the economics things, but in the well-rounded manner, right? So the starting point we can discuss with the introduction of this Wealth of Nation. Right? So that is the book written by Adam Smith, right? Which called an inquiry into the nature and causes of wealth of nation. So how the wealth is determined, right? So according to Adam Smith, the wealth, right, depends on the factors of production, right? The resources, right, that we have. So that's why people sought resources, right? Accumulating resources, countries from that time, right? So 1970s, especially, right? So that's basically Adam Smith's explanation is microeconomics. Talk about the microeconomic analysis. Right? So that is the starting point of economics we talk about from the introduction, from the invention of this wealth of nation. Simply we say wealth of nation. So that is the Adam Smith version. Right? It's not how the wealth is determined, right? So now, so after that, actually, from that onwards, right, economics evolved, right? So different economics express different ideas, right? So we call them as classical economics. Classical economics, right? Classical. So basically from 1776 to 1930s, up to 1936, especially, right? We talk about this microeconomic foundation. Most of the economics try to explain the things. Alfred Marshall, Lionel Robinson, like ABC, different economics, right? All these people, all these economics, right? So they talk about the economy in micro point of view, right? So that is the evolution of the microeconomics from 1776 to 17, sorry, 1936. So 1936 is the another turning point, no? In economics. What is that? 1929, what happened? 1929, there was a great depression, no? Right? World recession. Right? आर्थिक अवपात right? World economy. Output decrease, investment decline, no? Right? And income decrease, no? Right? Likewise, no? Right? Like we experienced very recently, no? Right? So in the world economy experienced recession in 1920s, especially 19, starting from 1920s. So now, actually, what happened was to address this recession, right? Now the ideas developed by the classical economics is not support, right? To address these questions, we were in 1920s as a result of Great Depression. Right? So they failed. That means the classical economics or the microeconomics ideas is not support to explain the situations arise at that time because it's covering the overall economy, right? So explaining the micro way or micro ideas, microeconomic theories, not well address these issues, right? Macroeconomic issues, right? Especially, right? So that's why the after 19, especially 36, so the John Maynard Keynes, right? He explained the economic situation, right? At that time, based on a new model. So 1936, John Maynard Keynes. Keynes, right? So he's the first introduced this macroeconomic foundation, right? To explain the situations, to address the prevailing situation that occurred in 1980s. So that's actually invented the general theory. So that is the third theory of macroeconomics. Yes. And money. So that is the book written by John Maynard Keynes in 1936. 1936. So through that invention, we analyzed the economy, right? Background, theory, right? And the causal factors. We identified as the demand side factors are more responsible to explain this situation. So that's why government identified as the demand side. Now, economics we divided into two sides. One side is supply side economics, demand side economics. Now, the classical economics basically talk about this supply side, the real factors. What determines the output, that depends on the factors of production and the technology and so on. Right? So those are the originally Adams identified as the wealth of the nation. What determines the wealth, depending on the ownership of factors of production of the country, resource base, right? Resource base, right? So that basically explains the supply side. This physical economics, they are actually supply side. So, but criticizing now the classical ideas, John Maynard Keynes explained the importance of the demand side factors, right, in explaining the economic situation. Right? So he developed new model, right? So that is the he identified as the model of income determinants. So this analysis, right, model of income determination. Okay. So now we know that, right? I'm talking more things, right? Because we can discuss these things later as well, right? So the classical economics, now that is the starting point, no? Here we talk about, no? Right? So what happens 1776 is that is the starting point. Economics started, no? Right? Actually, even though there are certain writers explain economic ideas before that. So formally, the starting point we can note it from 1776 onward is the wealth of nation. Right? So we need to remember these things, right? Now, if I ask in the MCQ test, what is the wealth of nation? Who is the right? Who invented? Okay, that John Maynard Keynes, Adam Smith, Albert Marshall, ABC, as a economics students, right? And when you say the general theory, that is the product of John Maynard Keynes, right? General theory of employment, interest, and money, right? So there's a branch of economics. First, we identified the microeconomics started, no, right? From 1776 to 1936, right? 1936 is the starting point in economics. We identified the macroeconomic foundation laid down with the development of general theory by John Maynard Keynes, right? And there are certain changes took place later on as well, right? Now we talk about this model modified by the ISLM Higgs, right? He modified this model. General theory model, this is the model of income determination because it look at the one side in the economy. Right? I not explain the now we are going to explain the overall economic behavior. Economics, no? We are going to study the behavior. From macroeconomic point of view, we are going to study about the behavior of the economic variable. Right? Now, in economy, we identify as a set of variables. Okay? බලන්නේ මේ අපිට කොහොමද හැදලා තියෙන්නේ ඒක අපි දකින්නේ මේ variables ගොඩක් එකතු වෙලා තමයි ආර්ථිකය. මේ variables එක දෙනවා කියන්නේ consumption, investment, government expenditure, money supply. ඒවා අපි කතා කරන්නේ ඒවා වෙනස් වෙනවා කියන්නේ ආර්ථිකය ගමන් මාර්ගය වෙනස් වෙනවා කියන්නේ. So we need to study about these variables in macroeconomics. In microeconomic point of view, we talk about the economic agents, no? Right? How the consumer behave, how the producers behave, no? Or even how the government behave, no? Like that, economic agents, micro. So that also gives some explanation because some theories even macroeconomic develop by looking at the individual behavior, no? Right? For an example, if you take the labor market behavior, no? Right? Labor demand and the labor supply. Right? Those are the forces in the labor market, no? That determine the wage rate. Right? Wages depends on the labor demand. There are laborers who supply labor, no? And the firms are there. They are the demanding side. No? Interaction with these two parties determine the price for the labor, no? Wage. No? Right? So that determines the labor market. No? We talk about in microeconomics. we can look at the individual labor demand and the individual labor supply decisions, how it is determined. Right? So same thing we can apply in the whole economy, right? How the market is behaving, right? So when we explain the thing, for an example, the aggregate supply, right? Part of the labor supply also there. Right? So when we are going to the aggregate terms, we need to look at the individuals' behavior first, right? So therefore, this micro and the macro is very, very important. There's a relationship also. Because if you want to study about overall economic behavior, you must know how the micro way, how it is happening, right? Individual behavior, how it is operating. Right? There's a relationship also. But one can argue we need to have some kind of how to explain the in the current setting, with the current problems. In order to explain those situations, we need to know about the macroeconomics very, very much. Overall economic picture. We need to have a overall economic picture. Right? Okay, right? So that's about the now the we understand the development of economics. Starting from 1776 and 1976 is another turning point. And that also further developed, no? Right? Different economics explain different ideas, no? Right? So those things now, this is the classical school, and in ancient school, like that we identify schools of thoughts. How this evolved over the time to time with the ideas developed by economics. So as a part of that, we identify another, after 1970s, another group of economics. Those are called monetarists, Boulevard. So they explain the importance of this money matters. So they highlight the money matters are important, no? Monetary economics. There are different branches in economics, not only micro, macro, no? Right? In the evolution, we identify development economics, how you study managerial, macro, micro, and the economics, international economics, no? Right? And political economics, no? Right? Labor economics, no? Right? Information economics, no? Industrial economics, no? So branches are there, right? So many ideas developed with this initiation of later on. So we see the progress of economics, right? Up to now, right? So we are talking about important things, especially the resource allocation, right? Right. And when you talk about this, the underlying thing is in economic thing is scarcity we identify, right? Because resources, we need to allocate the resources, right? So if we are trying to achieve the goals, right? In economics, right? So in order to achieve that, we need to have the resources. We need to allocate the resources. Right? The underlying problem is these resources are scarce. Right? Even individual point of view, you can think about your resources, right? So that's limited. We don't have money, especially. Our income is not sufficient, right? So that is our constraint, right? So to receive income, right? So as an individual, we need to maximize our utility, right? So as an individual, right? So in order to maximize utility, what we need to do? How you maximize your utility? One way is consumption, right? Consumption. And also you make some investments, right? Right. So that's coming under another part, business side, as investors. Then you come to achieve your objective as profit maximize. As consumers, always we are trying to maximize our utility satisfaction. And consuming goods and services, products. In order to maximize our utility, we need resources. No? Right. So one resource is the income we receive. No? Right. So that is not sufficient. No? Your monthly income. No? salary income, right? So therefore, you need to manage your income in a fair manner, right? Allocating different consumption revenues, right? You need to manage your consumption pattern. Considering goods and service both, right? This is also part of your service, right? Education, right? Here also you are trying to maximize your utility, right? What is why you are following this course? Right. Is your satisfaction? What is how you get the satisfaction once you pass something? No, they are also satisfied, no? And then you satisfied with your promotion, and no, you get higher salary and so on. Right? So your satisfaction. Right? There are different motives, right? And so motivational factors, right? Hey. There are different motivational factors and motivation. That's all satisfaction at the end. Very satisfaction, right? That's why you study, right? You have dividend income, right? You allocate certain portion of your income, your parents, no, your family, no, for this, no, right? In order to maximize your utility, get the satisfaction, and to achieve your objectives, no, right? Okay, right? Right. So that is the now we talk about this, right? So now let's talk about the nature of economics. What is the nature? We will go skip, right? Yeah, but if you have any questions, you can ask. Right? You can raise any ideas here. So that's interactive. I'm also encouraged, right? I'm also motivated. You ask questions, if you raise some concerns, you give some feedback, and so on. Right? So we can. This is not a one way, right? We need to. It's a two-way communication, right? So that is very important, right? So then we can go for a in-depth analysis, no, right? If your ideas, your problems arise, right? This will discussion turn different sides. No? So that is it's good for me also, right? Right. Otherwise, I will just go through, right? So if you ask questions, right, you can go deep way, right? Okay. Right. Okay, right. So what is the nature of the economy? Economy is the social science, no? Right? We know that. Why we say it's a social science? So there are different sciences. Right? Social, no? Right? You study, right? Because here we study about the behavior of the mankind, no? Right? How people are behaving in a society, no? Right? So when they are trying to achieve their goals, no? Right? So that's a social science coming under the social science, right? Societal behavior, right? Individual, group, and the societal behavior we study, right? In economics. That's why we say it's a social science, right? So we are trying to answer the economic questions, no? Right? In economics we assume rational man, no, economic man, no? Can you remember? Rationality is there, rationality. That is very important. Economic man. Because we explain economic behavior, right? Economic behavior, right? So we are rationality is there, no? Rational concept. So rational man take the rational decision, right? So economics we believe that there are certain assumptions we make, right? In economics, unlike other sciences, right? Economic we since we study the society, how the society behaves, right? How the individual behaves in the society, right? So our lab is the society, right? Unlike other sciences, we are not confined to the lab environment, right? We cannot control the elements there, right? In society, but in a lab environment, if you do, you can test. by controlling the elements, no, right? Other variables and so on. No? But here we cannot do so, no, right? Because we are studying the behavior of the people, right? We cannot control, no, right? But we can do certain assumptions, no, right? That's why we make assumptions, no, right? Even when you talk about simple demand, clearly, no, right? When you talk about the demand depends on the price, on price, we assume all other factors remaining constant, no, right? Set this variables assumption, right? Right. Otherwise, we cannot explain the negative relationship between the price and the quantity demand, no, right? All other factors change, no, right? You can take one by one. We take the two variables, no, right? Price and the quantity demand. We assume other factors other than the price which determine the demand, they may be constant, no, right? So then we can relax other factors and see how it is affect the demand. That's another side, no, right? So likewise, no, right? So we make assumptions, right? We believe the economic man, right? Rational, no, right? Rational. We assume the rational behavior. Right? So always there should be an economic behavior because we need to allocate some kind of. This is basically talk about the resource allocation. Right? Our individual income, how we allocate. No? If you are not rational, you will not be able to maximize your utility. No? Right? You will not be able to maximize your satisfaction. No? Right? Because our resources are constrained. Therefore, available resources you need to manage. No? Right? So that's why we believe there is economic behavior, no? Rational behavior, no? Right? Rational behavior means you always try to maximize your utility, no? Right? As an individual, right? As a consumer and the producer. This is max utility, no? Maximize utility. Here the maximize profit, no? Right? Maximize profit, no? Right? As a producer, maximize profit. No? As a consumer, maximize utility. That's a rational, right? Behavior, right? We assume the rational behavior, right? All the economic theories, microeconomic theories, no, right? We assume the rational behavior. We believe that always the consumer is trying to maximize his utility. No? That's why when we talk about the utility theory, no, right? Indifference curve, right? We talk about the utility maximization, right? At which level the consumer maximize utility, no? We take it as an equilibrium point, no? Right? We know, we discuss it, right? And the producer also maximize profit, right? Or minimize cost, no? Right? In order to maximize the profit. So the theory of the firm, no? Right? To study the theory of the firm, right? Always we talk about how the producer maximize profit by allocating his limited resource, no? Right? Resources, no? Right? Most efficiently, no? Right? So let's talk about the what is the graphical analysis. You may remember isopos curve long, right? So right, so explain those things, no? Right? Here the difference utility curves, no? Right? Here isopos curves, no? Right? Someone is started, some period. Can you remember? Right? Those things explain profit maximization, right? And at a particular point, producer also maximize by allocating its resources, no? Right? That's equilibrium point we talk about. So what is that? In economics, we always talk about one thing, one important concept, equilibrium, no? Right? That is important notation, no? Right? Equilibrium analysis, no? Right? At a particular point, these different parties or different stakeholders come to the stable situation. No? Market come to the stable situation. They are studying that, no? Stable situation. Therefore, we can use comparison purpose, no? And how the benefit is passed between the participants, no? Right? Whether it's equal manner or different way, no? Right? We look at all these things at the equilibrium analysis, no? Right? So there is the equilibrium, no? Right? Because we believe there are different forces, no? Operate at a particular point. Those forces come to the stable situation. that is both parties satisfied at a particular one. So that's the equilibrium point. Apart from that, another analysis is there that is called marginal analysis. Right? So one is in economics we talk about equilibrium analysis, right? Equilibrium analysis. Right? Other one is the marginal analysis. In the next discussion, when we talk about the business economics, right, we will pay more attention on marginal aspects. So that is the decision making, right? When you at this level, we are not going to talk about that, right? Marginal analysis based on these principles. Now we are talking about the principles. Right? We are not focused on decision making side, right? Application of those theories, consumer theories, theories, right? But the latter part, we will be able to study about the decision making side, right? So that actually, in our decision making side, we use the marginal concept. Marginally, we look at the slope of the curve. Right? You know the curves, no? Right? Demand, supply, or the cost curve, revenue curves, no? Profit curves, right? So we look at the slope of the curves. So that gives the more insight, right? For us to take decisions. Now in mathematics, we use the derivatives, no? Right? Find the slope in the derivative. Differentiation, right? So we will study later on. We talk about business economics, managerial economics, right? So those things, right? So that is therefore the decision making, right? We look at the slope of the curves. So therefore, even though when you draw the curves, you must be very careful, right? Yeah. Slope එක වෙනස් වුණොත් වෙන දෙයක් කියවෙන්නේ, right? Because we are going to take decision, right? That slope explains important concept, right? Even though just we draw the curves, right? But slope itself explains important things, right? So for us to take decision, that slope is very important. Okay, right? So economic behavior, right? Now when we explain this economic behavior, so people always try to maximize utility or the profit, right? So we can take some economic activities, no? As a consumer, as a producer, right? We know that we consume, no? Right? And also we distribute, and we finally consume, no? But the starting point is the production, right? Production, exchange, distribution, and the consumption, no? Right? So those are the basic economic activities, no? Right? Production, no? Right? So what is production? Yes. What is production? Product has the capability of satisfying people, no? Right? So now we know that underlying we are trying to maximize utility. To maximize utility, we need to consume, no? We need to consume products, goods and services. Goods and services, generally we call it as product in economics. Right? So the production is the, so we need to some kind of, it's a process, no? Right? We need to allocate inputs, no? Right? The output is the production, right? So the production has the capability of satisfying people, no? Right? Right? So utility, no? It gives the utility, right? Product has its capacity to give the utility, right? So the production, we know that that the basic economic activity, right? So we allocate the factors of production, right? In country, right? To produce goods and services. Those factors we identified as land labor, capital, and efficiency. And the technology also we can take it because it's combine these factors in a fruitful manner, right? And then the exchange, right? Exchange means earlier we had the direct exchange rate system, right? What is that? Barter system, right? In the early stages, we call it as primitive societies, how they transact by exchanging goods to goods, goods to service, service to service, like that. Right? So that is the direct exchange system, right? But later on, what happened? This system changed, right? With the evolution of money. Money came as an intermediator, right? Later on. So that actually facilitates for the transactions, right? That reduce the what is called the transaction cost, right? Transaction cost. Earlier, the transaction cost under the barter system, what happened? Under the barter system transaction cost is very high, because you need to find the correct person in order to exchange, time consuming, and there is a one concept is called there. Can you remember double coincidence of bonds? Can be signal parties then they can only then equal with and what only become what only fish. I like the cow, right? Cow can I had shown what cow can only got. The bonds are matched to each other, right? You can go do the transaction, right? Otherwise, transaction will not take place, right? So that is called double coincidence of bonds, right? Under the barter. Barter prevail under the double coincidence of bonds, right? Double coincidence of bonds. Umanamandi Divika Samavad. The bonds or the requirements of the both parties should be coincide, should be matched each other, right? Otherwise, transaction will not take place under the barter system. That was the early stages. Under the primitive societies were hunting, right? Customer, and barter system. In the later after that, even until the money came as an intermediate. Early stages, people use this some kind of animal stuff, trains, gems, ivory, even the price very, but later on it developed, right? Gradually. So those are the primitive forms of money, right? So money, in the development of money, transaction cost reduced, right? It's easy, for us to do for the exchange, right? That facilitate for the exchange, right? So when there is a facilitate for the exchange, transaction double, triple, growth also accelerate, right? Facilitate for the growth. So with the development of money, economic growth also took place the faster rate. Later on, trade also expand with that, right? Domestic trade, international trade, that also expanded, then double, triple the development process, right? So that's why the exchange, that's an important activity, right? Right? But that there also we see kind of development, right, from the barter system to modern systems, right? Now we are talking about the moneyless economy. We talk about barter, then money. Now we are talking about the virtual, right? Virtual money, right? Cyber money, right? Bitcoins, even the electronic forms, electronic money, electronic checks, right? And online transfer systems, right? Online real-time transfer systems, right? Likewise, it's facilitate further, right? Right. So then that's the basic activity, right? So those are the basic activity and the distribution, right? Distribution of goods, right? So different transport systems, right? And finally, it will end up with the consumption, right? So that is the final process, the consumption, right? Consume goods and service, right? So there are also we take some decisions, right? We are talking about this consumption, right? So how we consume goods that depends on different factors, right? Consumption mainly depends on the income, right? Income consumption is as a function of income, basically, right? So there are other factors that determine, right? Maybe the interest rate, price expectations, right? So facilities, facilities given by the suppliers, markets, and different factors affect the consumption. So that is also complicated. We need to study, right? Even though we take the consumption, there are economic theories, right? We can talk about the consumption. Starting with the absolute income hypothesis, like the permanent income life cycle, right? So different theories also refer to explain the consumption, because consumption is the single important element in economy, most powerful element, right? Because most of your income you allocate for the consumption. From your income, more than 80% you allocate for the consumption, right? 20% for the maybe the savings, right? So it's a single important element, right? So that's why we identify as a demand side factor, right? Consumption form the significant part of the aggregate demand, right? Explaining the aggregate demand, consumption perform important as a single element, right? So it's a very important economic activity, right? So we can identify those economic activities, right? So basically, when we explain the economic behavior, right, as a producers, consumers' behavior, these things also related with that, right? Okay. Any questions? Am I going fast? Faster? Right. Okay. Right. Right. So this is the now we talk about these things. Science we divided into social science and the natural science, no? Right? Geoscience. Like they know you study geoscience, no? Right? Chemistry, physics, right? So, but in social science you study like economics as a part of that you study, right? So you explain human behavior, right? And in social science, other sciences we see there's no such element. Human behavior is not an element, right? So basically economics and chemistry, physics, other subjects not both, those are the natural sciences. So this is the environment and we are not confined to the power that is the society, right? So that's why we make assumption since we look at the behavior of the individuals, groups, and the society as right? Okay. Right now, what are the definitions? Now, when we talk about the definitions of economics, right? We can identify different definitions, right? There are different economics, right? With different ideas. Starting from, let's say, start from 1776, Adam Smith, right? So that is the wealth. His definition is associated with the wealth, right? So economics is science of wealth. What determines the wealth? Country's productive capacity determines the wealth. Productive capacity depends on the factors of production, right? Right? The wealth depends on the productive capacity of the country. Wealth determines the productive capacity, right? So productive capacity means now you know that when there is expansion of the productive capacity, we identify that as the growth, right? Economic growth. Economic growth. If there is expansion of the productive capacity, now in the PPC diagram, can you remember? PPC, now if we take here the capital goods, consumer goods. This is the PPC, production possibility frontier, right? Maximum boundary that we can predict. If this capacity increase with the expansion of the resource base, That is growth, economic growth means shifting the PPC to the right. I told you that. The productive capacity depends on the factors of production. Factors of production, right? And the technology together, right? Because nowadays we talk about the technology. After 1990s, right? Technology leads the country's economy, right? With the innovation and the invention, right? So, plus within the factors of production, right? Determine the growth, right? So that determine the productive capacity. Depending on that, wealth is accumulated, right? We can expand our productive capacity. We can have a wealthy country, right? Wealth accumulated, right? So the productive capacity is depend on the factors of production, right? So, those are the land labor, capital, finish. Now, another thing is when we talk about these factors of production, we talk about the productivity. What is productivity? So that also determines the growth, right? Now the growth depends on, now you can identify the two factors. One is the factors of production and the productivity, right? So the growth depends on two factors based on the productive capacity that determine the factors of production, availability of factors of production and technology, and the productivity. So basically, growth depends on the resource base, that is the productive capacity, and the productivity. So if we can accelerate the growth potentials of the country, we can expand the resource base of the country, right? Our resources when we can expand the boundary, right? Other one is enhancement of productivity. We can expand, enhance the productivity, we can accelerate the growth potential of the country. Now, what is productivity? What is productivity? You can tell me. So there is some kind of technical relationship between the input and output, right? So average output produced by 1 unit of input, let's say, right? So that means the productivity means total output divided by total input, right? Total output divided by total input. If we can increase the output, right, then the faster rate of inputs, right? Then input output then there is a productivity input, right? Other one is keeping the constant input. If we can expand the output, we can increase the productivity, right? So that is the average output produced by 1 unit of input, right? With the productivity improvement, what happens? Increase the output, right? Output right? Cost take out, right? Yes. Price take out, right? Yes. What else? Output increase, production increase, growth accelerate. Cost of production decrease, and the price decrease. Quality also improve. Yeah. Quality is very important, right? Because we improve the productivity through the technology, by one. How we can improve the productivity? One is we can use the education even now. This is productive with the human capital, right? And we use the technology, right? Or technology. So that actually quality also improves. Right? Both these things happen, right? So then, through the specialization, division of labor, all these things are the sources of productivity. Right. So that's also a part of that, right? Okay, right. Now that Adam's Smith definition, no, right? So that is the science of wealth, right? So we can identify different definitions given by different economics. One is for wealth definition, right? Another one is welfare definition. Another one is scarcity definition, right? Now, wealth definition is formed by the initially Adam Smith, 1776, right? So that actually explains how the wealth is determined, how the growth is accelerated, right? Wealth depends on factors of production and so on, right? And some other economists also further talk about the wealth side, right? Like Ricardo, David Ricardo, right? So he also emphasized the wealth, right? And there are other economics. David Ricardo, right? He explained the instead of explaining the wealth, this wealth profile, distribution of wealth, how the wealth is distributed, right? Different stakeholders in the economy, right? That talk about economics, talk about the distribution, right? You know, part of economic activity. Right? So the David Ricardo explained how the wealth is distributed. And then we accumulate the wealth, right? And the distribution among the population, that's also very important. There should be a fair definition, distribution, right? So let's talk about the David Ricardo, right? So the JBC is a French economics, right? So he also emphasized the economic as the science of creating wealth, how we the economic basically how wealth, right? If they both also, right? So we also talk about economics as a part of knowledge, right? Knowledge. So knowledge also there, right? We know that now when we talk about economic growth, right? Uh, knowledge also we take, right? As a factor. Right? So that also related with the wealth, right? Volcker identified the wealth, the knowledge as a part of it, right? Right. So let's talk about economics, right? So those are the wealth side. And the other one is the well-being, right? Welfare. Economics talk about the welfare side. How the welfare, right? Material well-being, right? කියන්නේ විසුගේ භෞතික සුඛ සාධනය කොහොමද වැඩි කරන්නේ කියන්නේ, right? We talk about economics. So as a mankind, right, in the ordinary business of life, to examine how the individuals and social actions which mostly connected with the attainment and with the use of material wealth. Right? Material wealth. Economics basically talk about the how to improve the material well-being of the society. So that's actually the distribution of wealth and so on. Right? Equal and a fair income distribution, those things. Right? That's the welfare side. Right? So, Alfred Marshall actually he also explained economics as the engine of social welfare. And there are other economics can also explain the welfare side of economics, right? So, you define the economics, right? It's basically economic expansion of the general cause on which the material welfare of human beings depends. Right? So, how basically as a human beings, right, we are trying to achieve our welfare, our supersadhan to enter and welfare means we are trying to maximize our utility, right, and maximize our profits, right. So that's okay. So that is the welfare definition. And the important things we can look at later on, right? So Diamond Robbins, right? So actually explain the economics in more scientific way, right? Scientific definition. We talk about according to the Diamond Robbins, right? He actually wrote a book, Nature and Significance of Economic Science. That is the book invented by the Diamond Robbins in 1931. They actually explain the economic is the science of studying human behavior as a relationship between the end and scarce productive resources, which could have alternative uses. Right? So let's talk about some kind of resource allocation. Right? So since the resources are limited and scarce, we need to allocate resources in the most efficient manner in order to achieve the organization to achieve the practice work. Right? Basically, that talk about the scarcity side of the economics, right? So basically, economics talk about the resource allocation, right? How we allocate resources most efficiently. We call it as the optimum. Optimum manner. Optimum manner. Optimum manner. Yeah. How we allocate resources most efficiently. Most optimum. So that is optimum or optimal allocation of resources, right? Right. Okay, right. So, so that actually highlights the scarcity concept, no? Right? According to that, because resources by nature, we know that we cannot utilize, we can't utilize the resources, available resources in the society to satisfy all the needs and wants, right? So that is a relatively resources are scarce, immediately supplied. So that explains the scarcity problem, right? So that's why we need this economics, right? So economics study about the allocation of these scarce resources most optimal manner, right? To attain the individuals, groups, and the organizational goals. So that is the scarcity definition, right? So likewise, we can identify these definitions for the economics time to time. Here is interpreted economics in different way, right? But more scientific definition we could find the Diamond Robbins scarcity definition, right? This is talk about the resource allocation. So the underlying factor when you talk about the economic is the scarcity, right? සම්පත් ගැන කතා කරනවා නම් ප්‍රශ්න තමයි සම්පත් ටික ගන්න, right? And all the hundreds, no? Regardless of their size, no? Small or the large, developed or underdeveloped, right? Any country, the socialist or capitalist, common problem is the scarcity, right? The resources are scarce compared with the needs and goals. Right? So therefore, all the economics suffer, right? So that's why the economics talk about this resource allocation. Right? How we allocate these scarce resources most optimum. Right? Now, based on that, we can identify the common definition, right? All these things, right? Commonly, we can take now economics is a social science which deal with how the individuals, organizations, and societies to allocate scarce resources at their disposal to obtain the maximum benefit. Right? Right? So that is the basic idea of economics. Basically, underlying concept is the scarcity. Economics is basically talk about how to allocate the scarce resources. So you know that why it is happened, why the resources are scarce, right? Does it explain that we don't have resources? No. Other countries, the resources are in our country, there are so much of resources. But if we take the individuals, how much of needs and wants are there? We have the limited needs, but wants, how we satisfy these basic needs, they different. change person to person, region to region, country to country, like there are so much of unlimited, right? Because as a human being, we cannot satisfy it, right? The one we achieve, we create another, right? It's like a step by step, right? Never satisfied, right? So that's why goals are unlimited and the resources are limited. The scarcity of the national, right? Okay, right. Right. Basically, now economics deal with two things, no? Allocation of resources on the unlimited, right? So, allocation of scarce resources on the unlimited pool, because resources are limited and the need goals are unlimited as a human being, right? So that's why the economics evolved, right, from 1776 to up to now, right? The same problem remain, right? Sometimes it double triple, right? In the societal development expansion, no, right? Instead of triple society development, there's a movement of the society, right? So the development, no, right? The needs and wants also, especially the wants, no, right? It's also develop at a faster pace, right? Therefore, this problem remains. So that's why we need economics to address all these issues. Okay, right? Now there's a discussion, right? You can, I will see the, once I get your group, do you have the groups here? There are 19 students, no? 28, no? Groups over like groups, not there. Group या form color नहीं, informal group something. Yeah. Out of 90, there are only 5. Online join. Like, anyway, right, we have a group, formal group, can you make a group? Shall I take a list and based on the order, shall we make a group? Try to find members each group. There are 28 or something. 6 group or another. They want to overrun over a group that and then they are you can tell your ideas. That is also a group for visible or invisible like but the thing is, if you are in a group, you need to work. Responsibility. You should work. There is something presentation for all the units must keep members actually participating. With that, shall I make the group or you decide your group? Shall I take randomly or into group? Yeah, you have the right to decide. So you are the physical available, right? You are mostly welcome. Your ideas. Okay. Shall I make you? Sorry.
Better to be by us.
You get a receiver.
Physical students.
Yeah, others.
So you are going to make others also like.
Yeah. Do you have the possibility to contact them? Are they contacted you?
There is a group in general group which created by all this.
Yeah, that's a
There is a group.
that you go.
There is 34, 34 to 33 members are there.
Now these all the
Yeah, 10 people are somewhat important. Others are, but
they are separate. They are in a separate group.
no, they are in our group.
Mixing the other.
Yeah, they are outreach. And also we have 80. They will not come in these two subjects. Only CA business level people are only here.
80, they are not following this.
They got exemption for this subject.
So we use that official group. That's fine. No harm, no problems arise. So those who are in the active, right, they will submit. Right? If they need an active ID, but active ID, I don't know, that's why I asked you. So I don't have understanding what is to official group, how they form the group. Those who inactive one, those who don't follow, are they in the group with the other active members?
Some are there, no issue.
Activities they are they followed or not? Are they following the course or not?
We don't know, like, this is the first week, so we don't know other persons and who are coming.
They are in university, right? So I will contact the office and ask them. They are able to go back. If they advise, we take the and go upload those papers. If you have any other concern, you can raise. So then we can make the changes and so on, like likewise. Okay. Right. Can sign, no? Right. Right. So you can anyway write since the depending on the right now the time, right now for the time being, right? You can do these discussions, right? Even informal discussion with your these physical members, right? Online members, they can discuss in your own way, right? No, right? So you have to do some kind of yes, right? Taking facts and write some kind of discussions, right? Maybe, right? To elaborate knowledge on this area, right? Just how you understand, right? Okay, right? Now, you know this kind of basic things, right? So if you look at this diagram, right? You see the whole story, right? That we talk about, right? In the human, we know that as a human, since we study the human behavior, right? We have the human needs and wants, right? Especially when we are taking the human wants, those human wants are unlimited, and the resources we need to satisfy the human needs and wants, those resources are limited, and also alternative uses, right? Resources are limited, and Like you know that these resources we can use in alternative way. Right? If you have certain money, there are ample of ways that you can use your money. Right? If you have physical things, if you take land or something, how we can utilize it. Maybe you can develop a playground, right? So you can develop a building there for business purpose or something, right? And you can use it for your own purpose, no? Maybe not the investment or the business, right? For your private use, right? Residence, right? So there are different options we have, no? Resources. We have money, right? Let's say we have 1 million, right? What you can do, right? You can deposit in a bank, you can purchase shares, right? And invest. You can make an investment, no? You can start a business, join with other colleagues and so on, right? So likewise, there are different alternative ways you can use the resources. So that's very important, right? When you select one alternative, right, you need to sacrifice others, right? So there's cost involved. In economics, we need to ascertain that cost. That is very much important, right? Another, do you have flood or something? We have flooding or we have fire? Right. Right. So those are the resources already used as a limited, no? Right? Supply, right? So that is the main constraint we have. Right? So there's a gap, no? Right? Unlimited wants and the limited resources. Right? That gap is we identified as the scarcity. Right? So scarcity is the relative concept when we compare wants and the resources. Right? If the human wants are unlimited, resources are limited, so there's a mismatch, right? That is identified as the scarcity. So since the resources are scarce, then what happens? You have to make a choice, no? Right? The resources are scarce and the alternative uses, right? You have to make a selection, no? Right? Choice means you have to make a selection, no? Right? So choice is necessary, no? Right? You have to make a selection. Selection is necessary because one thing is the resources are scarce, no? Right? Other thing is you need to gain the maximum benefit from utilizing the resources. Other thing, the resources have alternative uses. Right? Therefore, you need to make a selection. Right? So that actually selection means, in broad terms, you can take those are the basic economic problems: what to produce, how to produce, whom to produce. Right? You have to decide which goods that you are going to produce in economy. Economy, we know that as a whole, if we take the resources limited and alternative uses, we have to decide how we can utilize those resources, which goods first we have to decide what are the goods we are going to produce, in what quantities, right? And how to produce, that means the techniques that we have to use in production, right? Whether you use labor intensive or the capital intensive. Right? So how we can use those based on the maybe resource endowment, right? Again, it's other right? Resource endowment. Now we have the more labor, right, than the capital. So mostly we use labor endowment, right? We use the labor intensive techniques, right? We incorporate more labor than the capital, right? Since the labor is cheap, right? In the market economies, basically, since we are driving behind the profits, right? We need to think about cost minimizing techniques, right? And for whom to produce mean how the production is distributed, right, among the population. Right? That's the distribution side. So that depends on the purchasing power in the market. So those are the basic problems, right? So the selection tree, those are the different problems that we need to address, right? So how these problems are going to be solved, right? So depending on the systems, right, that means we have the different economic systems, we have capitalist, socialist, mixed economic systems. We use different techniques to answer these questions, right? So the price mechanism, no, price systems we use, no, the capitalist, and the planning system used in the socialist and mixed policies we use. That means with the combination of price mechanism and the planning kind of mixed policies we use in the mixed economics, right? So we identify these economic systems. Coming from the traditional economic systems also there. Capitalist, socialist, mixed, right? So those are the economic systems. Finally, we can identify. So once you look at how these problems are going to be answered, in order to answer these questions, like problems, right? So we can work with the to be seen. Mostly there's mixed economics, no? Right? Now, socialist systems decline after 1990s onward, right? Socialist system collapsed, right? Now, capitalist systems, even though we say we cannot see the pure capitalist systems in the world, right? Mostly we see the mixed economic systems, right? So that means basically this they entertain the price systems and the planning goes with the some extent the government monopolies, right? Okay, fine. To read the break, any questions? Any questions? If you have any questions, you can ask. Never take a over that to follow this. Right? Right? You can go faster. Faster. This one, right? So then you come to the other. Any questions so far? No questions? Okay, we can take a few minutes break. No? How many minutes you are taking? Huh? 15, 10, 5. Okay, you can take the break, right? Please come as soon as possible, right? Please come. So where are you come from? Delhi.
Yes.
Very far.
Very unfortunate thing happens, so not late.
How about your economics previous experience in economics?
Very yes.
Very
Yes.
commerce stream.
Yes, sir.
Are you working now?
Yes, sir. I work at BRC auditor. I work as a senior auditor associate.
You are at the chartered.
I completed corporate exemptions.
How many subjects you work?
Sir,
How many subjects? Excel.
every year it is different. From first year, 6 subjects.
So how many on the first year? How many subjects you need to sit?
I will use 5 subjects.
2 semesters.
Yes.
Now the EXP you are all of you are exempted around subject. बोला मैक्रो इकोनॉमिक्स कला दी ना थियरी कला one of the theories कला yeah inflation unemployment theories inflation theories growth theories से हम कला दी solo model Well, the lecture after what time? 12. That means 12 to 3. Then you have to take when you take your lunch. After 3. Get a break. Then after that you will become sleepy. So if I continue 11:30 or something, is it okay for you? Because if you are not taking lunch, now you are having some kind of refreshment and then 11 you cannot take lunch. start. Yeah. Okay, right. So we'll basic concepts we'll go through, right? So we can we want to get more. So we can read the textbooks, right? So as we discussed, now we know that we talk about this scarcity problem that identified as the gap between human wants and the resources. Right? So human needs, so those are the basic needs that we talk about. Right? So since for the survival of as a human beings, right? So we need this food, water, shelter. Those are the physical needs. We can identify those needs: physical, psychological, and mental needs. Right? By nature, these are limited. So as far as anything concerned with human needs. So those are the basic, as a human beings, basic things that we need to fulfill. Right? So those things are actually limited. Sorry, limited things. And the wants, but when it comes to the wants, right? So as we highlighted, so since we have the different desires, person to person, right? So those desires, time to time, is different, right? Person to person, right? Country to country, likewise, right? So those desires as a human being, right, is different. So those are actually unlimited. Needs, wants. Because we know that we actually, as a human being, we cannot totally satisfy these human wants, right? When if you fulfill one want, another affiliated want is there. Right? For example, if you are living in a shelter, right? Whatever, you need to go to the some sort of house, right? With basic facilities. Right? After fulfilling that, we need a two-story or three-story building, right? Then we need house with the air condition or something, right? So likewise, then you need some kind of those who are in the remote area, they are willing to go to this luxury apartment like that, you know, right? That's a dream, right? You always try to fulfill. Right? So likewise, it's always it's created, right? So new wants are created and to never satisfy, right? That's why we are saying it's unlimited. Those are the basic things, right? As far as when we concern human, we have human needs and wants. Right. So we need resources, right? So, to fulfill these needs and wants. So in economics, we identify those resources as we mentioned, factors of production: land, labor, capital, and emissions. Okay. So in resources, we can identify renewable, unrenewable, right? So you look at the resources, right? Some resources are renewable, right? But certain resources are there you cannot renew once you consume it deplete, right? So we need to actually utilize those resources in a very carefully, right? Keeping certain resources for the future generations as well. If you take the forestry, fisheries, and the rivers, likewise, forest you can renew, right? But if you take the mineral gems, these natural gases and petroleum, crude oil, like that, once you consume it, right, it's never regenerate. So those are non-renewable resources. Right? So when it comes to the resources, right, so we can identify this the two natures, renewable and the non-renewable. But resources are very, very important, right? So we know that the management we identify different ways, right? resources how we identify, manage. 5 M's. What are the 5 M's? Economics we identify these 4 categories: land, labor, capital, and payments. The reward is the rent, wages, profit, interest for those resources. But in the management, what are the 5 M's? You are studying management, principles of management process. You are studying. And the higher levels, of course, you are strategic management, you are studying, right? Decision making side, right? 5 basic factors in management, what we call 5 man, method, machinery. Sorry? Minutes. I done here. Minutes. Man, that is the human labor, no? Right? That is similar to the machineries and money, methods. One more thing is there. What is that? Material. Material, right? So those are the 5 M's, right? Man, material, machineries, methods, money. So those are the 5 M's that we discuss in management, right? But when it comes to economics, we have only 4, right? So we need to manage all these 4, right? So the land, labor, capital, and the coordination of these first 3 is done by the entrepreneurs. They give the risk and the uncertainty. So that's why we get the profits, right? Because we know that high risk, high return, right? We don't know whether the business is success or fail, right? We have to take the risk, right? When we innovate the things, right? New business, maybe ventures, right? Success may depends on his lucky sometimes, right? His luck, right? And his ability to coordinate all other factors of production to achieve the goals, right? Right. So those are the factors of production, right? So you know those things, right? So if you look at the now the land means what does it explain? Not the physical land, it includes all the surface of land, right? Now, minerals, water, and all these things, space, forests, all these things include in the land. So that's why we identify this renewable and non renewable things there, right? But the land is fixed, right? We call it as perfectly inelastic, right? We cannot change, right? Even though the requirement arrives, right? It's fixing supply, right? We cannot change it. That's the nature of it. The payment for that is rent, you know that. And if you take the labor, what do you mean that those are actually include the not only the physical, right, and the mental effort. So the professionals, right, like accountants, you also, and they like, I mean, this professional group, right? So that's also part of this labor, right? Lawyers, engineers, all these people, right? So that's a part of human capital, right? We actually identify this labor one category under human, it's a knowledge with the knowledge, right? So it's coming under human capital. So that is the labor actually now. This labor, we know that even though we identify this both aspects in the mental and the physical, basically we talk about the labor as an important factor in economics, right? Because we incorporate in the production process, right? Labor, right? In the in economics, we talk about the labor market, no? Right? Labor demand and the labor supply, no? Right? So labor demand, the labor supply. So those are the forces in the labor market that determine the wage rate. So the payment for the labor is the wages, no? Right? When you talk about the wages, actually, both in microeconomics and when you talk about economy as a whole, like some kind of, even in the, we talk about classical economics, right? But we are not talking about the classical theory in demand possibility here, right? Basically, we look at the case in theory only. But you recall the ideas and the classical ideas, right? So basically, the labor, the one important factor that determines the output, right? So we in the production function we talk about in the theory of the firm, right? You may remember, right? So the production function explains the output and the input relationship, right? Basically, we identified there are two factors, labor and the capital, right? So production function explains the technical relationship, right, between the output and the factors of production, right? We take in the labor and the capital, right? So as a main way, like, even though we identified four factors of production, right? Okay, land, labor, capital, entrepreneurship, right? In the classical production function, we identified this labor and the capital as important factor because in economics we talk about the two time periods, can you remember? Short run and long run, right? So what is the underlying assumption there? When you talk about the producer's behavior, especially, you know that even if the we talk about these short run and the long run situation, short run we can change the labor, no? Right? That's a variable factor here. Capital is fixed, no? Right? So this is fixed, right? So in the short run, we identify the production to now when we talk about the time period, we can identify this production function, short run and the long run. Short run production function, long run production function. Short run production function mainly depends on the labor. Since the capital is constant, right? So then we take the labor decision in the short run, right? Now we know that in the theory of economy, later on we discussed, right, how the producers try to maximize the profit, right, by considering the short run period, short run production by changing the labor. So the labor decision, hiring, firing labor. Right? He has to decide the maximum labor inputs that the producer needs to incorporate in the production process in order to maximize the profit or minimize the cost. Right? So this is the short run production function. So that sometimes you can recall your memories that depends on the marginal productivity of labor. Because we change the labor inputs in the short run to maximize the output. Right? So there is a certain level that we can go to, right? Because capital is fixed. In the buildings, machineries, they were constant theory තමයි අපි නිෂ්පාදනය වැඩි කරන්න යන්නේ, right? By incorporating more labor inputs. Machine එකක් ගත්තොත් one machine if we can use 5 labor, let's say number of hours is there, but if we take maybe inputs, 5 laborers machine. Currently we are having the one labor only, right? So there is excess labor, no, right? So 4 we can incorporate, no, there is underutilized currently. 4 labor inputs we can incorporate, and we can increase the production, no, right? When it comes to 5, right, we use maximum level, the labor. Beyond that level, if we use the labor, more labor inputs, what happens? Productivity, it decreases, right? Marginal productivity decreases, right? Because higher than the railway, right? The petroleum corporation, right? There's extra labor, no, right? Because of the political appointments, right? They are running with excess labor, right? Productivity is low, right? So there is a maximum level that we can use the labor inputs, no, in order to maximize the output. That is the short run, right? But in the long run, what happens? We can add more labor capital inputs even, no, right? We can add new machines, new buildings like that. So they actually we take more labor and more capital in order to maximize the output. In the long run, both labor and the capital are variable. But in the short run, we can see both variable factors and the fixed factors. No? Labor is the variable factor, capital is the fixed factor in the short run. So what we do is, we are trying to maximize the capital output by incorporating more and more labor inputs, keeping the fixed factors constant in the short run. Right? So that explains the total output, right? How it is behaved with the labor inputs like that. Right? So that is the labor that we are using that in our future discussions, right? We incorporate, right, as an important factor here. When you talk about especially the theory of the production, right? Short run and the long run behavior, we explain. We incorporate these factors, A and F. So some labor is the variable factor, capital is constant, because we know that by nature we can change the capital in the long run. In economics, we identified this short run and the long run. Right? Short run and the long run. But like banks, right? Banks also they are not right. Short run, long run, right? Banks, when you are giving loans, no, right? The short run there is another period, medium term, no, right? Medium term, no, right? Short run, medium term, and the long run, no, right? The banks, we are giving loans. Short run is the less than 1 year, no? The banks operations. Long run means what? More than 5 years. In between 1 and 5, that's the medium term, right? The bank's point. But in economics, we identified short run and the long run in different way by looking at the variability of the factors of production. So the short run is the period of time where we can change the labor inputs in order to maximize the output. Right? The short run we see both labor, fixed factors and the variable factors. Labor is the variable factor, capital is the fixed. Right? But in the long run, all the factors are variable because we are going to expand the business in the long run. Right? We are going to scale up, no, right? Business scale is expanding in the long run. So this explains actually Hope-Douglas production function. In the long run production function, we call it as Hope-Douglas production function. So we will study in the area of the firm, right? We discuss, right? Things, right? Right. So that is the long run production function in the Hope-Douglas production function. The form we can write the same form, right? So Q A L alpha A beta. So that is the long run production function Hope-Douglas. Is alpha and the beta in mathematics, you know, those are what? Business mathematics. So those are the coefficients. Coefficients. Yeah, we then demand function. Take, this is the money demand function. Plus C1 y minus C2 y. The C1 and the C2 is the coefficient. Make an intercept point, right? C1 and the C2 coefficients, right? So make the y වෙනස් වෙනකොට money demand එක වෙනස් වෙන්නේ මේ coefficient එකක් දෙන්නේ. Because it is a 0.25 y minus 0.1 r, no, right? Likewise. So this is the coefficient. When we are going to estimate the equation, what we do? We are going to estimate this, no, right? Demand function එකක් දෙන්නේ, right? We are going to estimate the demand function. Then we got the demand function again, A plus B P, no? Demand function, right? This is the A plus B P. Demand function is negative, right? This price and the quantity, this is the quantity, Q is the quantity demand, P is the price, no? Right? Inverse relationship, right? Negative, no? Right? Coefficient is negative. B is the coefficient. So that is the slope of the curve. No? B. Okay. In mathematics, that is the slope. Right? We are going to estimate this. We estimate curve. Eighth estimate curve, that is the intersection point. Now, once you estimate, you will get 100 minus 0.25 P. That is the demand function. Right? So these are the coefficients. Maybe intercept point, then price coefficient again, right? So here likewise now these are the coefficients, right? So we are going to estimate that one. There is a meaning of that, right? This coefficient that explains when the labor change, how it is impact on the how it is given by the alpha, no? Right? When the capital change, how it is impact on the output, depend on the region, alpha and the region, right? Those are the coefficients. In your final year, you are sometimes if you are doing a research, no, right? You need to estimate the models, no, right? The regression, where you also need to estimate. Do you have a research in the final year? Right. So that is the labor is very important factor, right? We also identify the capital is also very important factor, right? Now these are the important things when you are taking the decision, right? So if you increase the labor by 1 unit, how much output change? That is given by the marginal productivity of labor, no? Right? Marginal productivity of labor is the slope of this. Now this curve, if we take the slope, right? Then the labor change by 1 unit, how much is the output change? Responsiveness of output due to change in the labor is given by marginal productivity of labor, right? Yes, so the आंशिक बाधायता. So the एक value करने निष्पादन बच्चों value. You need to estimate that, right? You don't see the productivity, right? We got the petroleum. Railway survey value करा निष्पादन value नहीं, right? Not significant. Right? Productivity very low because they are exercise. Right? So that's why we need to see those. When the capital is increased by 1 unit, how much the output increase? That is given by marginal productivity of capital. So MPL and MPK. Right? Those are, that's why I mentioned the marginal concept. Right? We need that marginal concept, marginal analysis to make decisions. Right? In economics, we make decisions, right? Production decisions, consumption decisions, right? In order to make such decisions, we need to estimate these functions, equations, and we need to estimate the slopes, right? And see how those the values, right? respect to changing those factors, how this the output change and so on, right? So based on that, we can make good decisions, right? So the consumption decisions, production decisions, likewise. So we identify those factors, no, labor and the capital. Capital is the human creation, no, right? We identify the physical capital, human capital, no, right? Working capital, no, right? Different concepts are there. Social capital, no, right? So those different concepts are there, right? And the entrepreneurship, that is also very important as the factors of production. We coordinate all the factors of production, right? In appropriate manner, right? Now, land, labor, capital is coordinated by the entrepreneur. BSAA can coordinate. So he has to take it there. He has to take a risk and the uncertainty in running this business by coordinating the factors of production of the resources in appropriate manner in order to achieve the organizational goals. Right? So those are the important factors of production that we talk about. Right? Especially now we take into account here this labor and the capital. When we are making decisions because output we take as a function of labor and the capital in the production function. We use this production function in economics, right? In order to analyze the output, right? Basically, changing the main factors of production, labor and the capital, right? So that is the production function we identify, right? Later on, we will discuss those things, right? Right? Right. So then when we come to the scarcity problem, we discussed, right? So that is the fundamental problem we are having, right? Once we look at these resources, availability of resources, and the human needs and wants, right? So that is the underlying problem in economic space, right? Right. So we have the problem, right? Scarcity, that's a foundation, no? Right? Economics, no? Right? So you know that why the scarcity is the foundation of economics, no? Right? Why is it? So because it's compared with the resources and the human goods, right? And if you compare all the countries in the world, right? So that is common. Right? Common problem, right? So that's why we need to study economics. Right. Right. And the choice, since the resources are scarce, we need to make a selection. So that actually explains the basic economic problem. Right. Choice is unavoidable, no? Right? Why? Why the choice is unavoidable? One side, resources are scarce. And other side, resources have alternative uses. Right? And also, we are trying to maximize the gain, maximum benefit we are trying to. So therefore, we need to make a selection. Right? Even if you are starting a project, right? What we have to do? You have to make a selection, right? You have to select the best project, right? That's why we do the project evaluation, right? Even in the national project, we do the feasibility studies, right? We look at the different feasibility, not only the economic, financial, right? Social, environmental, all these aspects. Because we look at alternative ways, right? And we need to maximize the national projects, maximum social return, right? With minimizing the cost inflicted upon the society, right? Environment, right? We need to select the best project. Normally in the project, what we have to do, we have to select the best alternative project, right? We take business, right? There are different ways, right? We can start a business, different alternative ways are there, right? Different business. As a businessman, we need to select the best project which maximize the return, right? That's why you do the project evaluation, right? You do the payback period, present value, net present value, right? IRR, we calculate all these things, right? So, because we need to select the best project, right? So in economics, when we select the project, right, we look at the cost and the revenue, right? The very important thing is we look at the direct cost and also the indirect cost, right? So that's why we say economics is the real analysis, right? So we look at the real cost, especially the cost side, right? Real cost comprised with the actual cost and the what do you call opportunity cost, explicit cost and the implicit cost, right? So in accounting, what you are doing, you know, accounting. You take the profit and the cost. Accountant like that. You know the accounting well, the entry, right? And the layman for accounting, right? But is accounting particular? How you evaluate the cost? Accounting, accounting, accountant always look at the actual, right? Accrual basis there, right? You take the cost incurred, no, right? All the actual cost incurred, no, during that period, no, right? Accrual basis, no, right? Isn't accrual basis, no? Right? Can you work the labor? Biadama ගන්නවනේ, right? වර්ෂයට අදාළයි, right? Accrue. But in the economic profits, economic cost means we look at the actual cost plus opportunity cost in that issue. So that's why we say the economic cost. Actual plus opportunity cost. So that is, we take the real cost, right? We can take all together. That is the real cost. Oh, opportunity cost is the real cost, no? Right? Next best alternate, no? Combo, right? All the cost price is that. It's a real cost. We take all the relevant cost, right? We ascertain relevant cost. So that is very important for the ascertain the projects, no? Project evaluations, right? Because why some projects is started and after sometimes collapse, no? Right? Because we are not ascertaining the real cost, right? The benefits, no? Right? As well. Therefore, in economics point of view, right? It's a facilitate for the project evaluation, right? Because since you consider the actual and the opportunity costing, since it involves the real cost analysis, right? It includes all the relevant cost and the revenue figures taking into account, making decisions, right? It's good for the project evaluation, right? Right? Right. So now we talk about the choice, selection, right? So that is if the resources are scarce, right? And limited, resources are limited, right? And the alternative users, and as a human being, we always try to maximize the gain, right? We need to make a selection. So selection is unavoidable, no? Right? And the opportunity cost, right? So that is the next best alternative forward, right? So if you have the 1 million, right? So there are different ways you can utilize such money, right? So you can buy a brand new car, right? But 1 million will then let's say a million you have, right? You can buy a තාමත් brand new එක right? යකරගොඩක් තිබ්බත් එන ගහන්න right? So let's say you have 150 million, right? You can buy a brand new car, right? And you can invest in a bank. Okay? Now, luckily, now the central bank go to the 1 digit single digit policy, right? What happened recently? Central bank monetary policy. What is the new decision? As economic student, you must know what is happening in the country, right? What is the latest decision? The state further reduced we hope that further reduced. Now it comes to single digit, right? Central bank going to maintain the single digit policy, right? Now earlier we had this policy, two policy rates, right? What are the two policy rates? Central bank standing levy, okay, standing deposit. Deposit rate and the lending rate, right? So that actually does not indicate the market around the right central bank to weighted average rate, right? So that you need a single digit 8%. Retail rates as well in the future we expect, but the bank's problem is practically what is the problem? Banks lending at a higher rate, right? Deposits were given at higher rates. Earlier rates very high, right? But India, right, what happened? When banks deposit even high rates or but banks, they cannot come to the rates. Time, even though we expect the retail rates come down, but that will not happen. But the lower rate, maybe that affect the lending also, right? It takes submission that we start doing something, right? Bank has to manage the business to that. What is the main margin? Profit is the margin the bank maintains, lending and the deposit, right? So that will be a problem for the banks, right? Reducing the rates, right? Even though we expect that way, right? But the longer term, that will be beneficial for the economy, right? Right. Now the opportunity cost, that is the next best alternative forward, right? So likewise, you have 150 million, you can buy a car, right? And you can buy a, you can deposit in the bank, right? At certain, let's say 10% or 9% interest rate, fixed deposit, or you can buy treasury bills, treasury bonds, right? Or you can start a business. Right? There are different models. If you rank it, right? Now first, according to your ranking, you are first buying a car, right? Then second, depositing the bank, right? Third, if you have the, let's say, what we call this, buying a plot of land or something, right? Likewise, you can rank it, right? If you select now older, I want to be in something, right? Just to decide buying a car, right? So what is the opportunity cost of buying a car? The next best alternative is the deposit in the bank, and the forward interest. Right? So if you have 150 million, you can deposit in the bank at the interest of, say, 10%. The interest that you forward is the opportunity cost. By the company, right? So likewise, we always look at the opportunity cost. Right? In economics, we consider the opportunity cost. Right? So that's why it's a real analysis in economics we maintain, right? Since it considers the actual and the opportunity cost. Right? Okay. Now you have given a small question here. Did you try this one? Opportunity cost. So can you next day when you are coming, right? Please discuss with your friends, right? Try to do that one, right? Okay. So that's a small question, right? Likewise, now we have the 1.5 million rupees, right? You got a lot of income, right? Transitional income, right? Now we have the two types of income. One is the permanent income, and the other one is the transitional income. So if you want suddenly bonus එකක් තමයි වෙනකොට suddenly ඒ කාලේ හම්බෙන bonus, right? Transitional income, right? So there are lottery company, right? You got a lot, 150, sorry, 5 million. So you actually wants to buy a new car by using the entire money. Now the car is expected to depreciate 10%, and the cost of maintaining the car is 150 per year. And the prevailing interest rate is even 12%. Now it's low, right? So you calculate the opportunity cost of buying a car first year. Money value assigned to the satisfaction of having brand new car, using it for a year, and the opportunity cost of investing the money in a fixed deposit. Think about it, right? When you are coming next time, please come into your ideas, okay? Right. Then the problems, right? So we identify the problems, right? So those are the different questions arise when you make the selection, right? Please refer the materials, right? Textbooks, right? You will get an idea. I'm not going to know, right? In the capitalist system, how this is going to answer. You take in A levels also, right? And the socialist systems, right? And the mixed economic systems, how this is answered, right? The capitalist system is to know that is a price mechanism, right? Profit is the main driving force, right? But in the socialist system, the main driving force is the welfare, right? Welfare oriented. Based on that, they answered these questions. And the mixed economic system, it's actually hybrid, right? Profit also there, market also giving some rule, and the government also control the market, right? In order to minimize the bad effects, right? And you know, provide benefit for the society, whole society, right? Government also. So in a mixed economic system, right? The mixed policies, right? So there is a government sponsored price mechanism system. Government sponsored price mechanism system. So you can think about, right, these different areas, right? So how these problems, basic problems exist in each of these systems, right? Capitalist systems, and socialist system, and mixed system. Right. Okay, right. So in a pure market system, market forces, right? That is the price mechanism. Command system, it's actually basically government planning authority, right? Taking decisions, right? Regarding the resources. Mixed economic system, both government and the market and they are collaborating, right? Think about it, right? And I have given some the advanced capitalist systems on features, right? You can read those things, right? And the advantages, right? and some kind of what's that called secondary systems. Negativity, right? You can recover it. Same like command economic systems, right? And what sort of factors affect to the decline in the socialist system? Right? You know that that was happened in 1990s, right? This federal Russian systems collapsed, right? Certain factors affect that one. One is the failure of organization, right? In the planning system, you know that they have collected information, facts about the overall economy, right? So that actually there's a weak point there, right? Planning, covering all the economy, getting information about the whole economy, all the factors, right? So those information are not correct, right? Therefore, we see the failure of organization. That is the one factor affecting the decline in socialist system in 1990s. And the quality also like emphasized. There is no quality control, right? Because competition is not there. Right? If there is a competition, quality always improves. So under these systems, there is no competition. Everything decided by the planning system. Quality is neglected, right? So there is another factor. And the innovations, right? That also lack of innovations, right? If there is no incentive system, right? In the market system, we see some kind of incentive systems are given, right? In order to encourage the people, right? Organizations. But if there is no innovation, that also affects the productivity and so on. And the environment, environmental technology. Those are the factors that goes to the failure of the socialist system in 1990s, and that actually facilitated spreading the globalization process, no? Especially the US system, right? And the new systems you can differ, right? So the arguments right? Okay, right? So then we come to these two branches, microeconomics and the macroeconomics. So what is the difference between micro and macro? You can tell me. What is the difference between the microeconomics and the macroeconomics? Yes. Micro means we look at the individuals, right? Household and the firms. How these individuals we call it as economic agents, right? Economic agents. Micro means small scale agent, it's a Latin word, right? Small. Macro means large. So here small means we study about the concern, small concern, economic agents. Economic agents. Who are the economic agents? Household, firms. Also you can take the government or you can take the external sector. Basically take the household as a subject. We look at the household and the firms, consumer and the producer in the market environment. Consumer producer, how they behave in the market environment. That is the basic microeconomics. Right? And the macro means large. There actually we look at the economic, what do you call it? Economic aggregates. Here the economic small units, economic behavior of economic agents we look at, right? Here we look at the behavior of economic aggregates. The samasthya. We take the economy as a whole. Here the small units, one aspect of the economy. But here covering all the economy, overall picture. This is actually this is the telescope. This is the satellite. Satellite, right? Telescope you can see the surround or here you are there and this AC machine is there and the lights are there. It's around. If you use the satellite, large area, right? Likewise, right? Microeconomics we use the macro lens. Microeconomics we use the micro lens, right? So they are micro lens. Once you look at the small units in the economy, how they are behaving in the market. Use the macro lens to look at the overall economy based on the economic aggregate, national income, national output, employment, price level, employment, right? All these variables are behaving, right? Then overall economy covering the overall economy. So the macroeconomic aggregates are the basically national income, national output, national product. Like, so we can take the other variables, balance of payments, right? Unemployment, inflation, right? Those are the variables. We take the economic. In other words, we can say we look at the averages, aggregates, and the averages. Averages mean general price level, inflation, interest rate, that is the average interest rate, weighted average, right? Price level, exchange rate, right? So the average rates we take, prices. And the aggregates also is national income, national output, behavior of such variables, we can output, GDP, right? So likewise, right? So micro, macro, right? So micro actually analyze the behavior of individual economic agents, macro analyze the behavior of economic agents, right? And there is an interrelationship also as we mentioned, right? When you talk about the macro economics, we assume micro concepts are constant. When you talk about the microeconomics, we assume macro economic concepts are constant. And there is an interrelationship also. When we develop theories, we assume macroeconomic theories based on the initiation done by looking at the micro point of view. First we look at the individual behavior, then we generalize to the whole economy. Like we are doing in the research. First we look at the sample and we are trying to generalize to the whole population. Right? So likewise. Right? And important thing is, right, graphical approach. Right? If I ask the question, difference between micro and macro, right? How we explain? We need to explain the individual behavior. We look at the demand and the supply. Is the individual demand for particular product X, supply of particular product X, no, right? For a particular market, this is the soft drinks, no, right? Demand, supply, right? Particular product, if you can take Coca-Cola, demand, Coca-Cola, supply, no, right? Pepsi Cola demand, or you can take any product, no, right? That's a one aspect, that's a partial aspect. We look at the partial. So this is kind of, now this is the price, equilibrium price, P star, Q star, right? These are the forces operating the market, right? Coca-Cola coming under the soft drink industry. Even though it's a industry, that's a micro, right? Whole market, that's a micro. Right? You take all the suppliers together, that is in aggregate term, that explains the macro. Right? But here, it's micro. Right? So that determines the equilibrium. Right? So this is the partial equilibrium. Partial equilibrium. So microeconomic analysis is the partial equilibrium analysis. Right? It's a partial equilibrium analysis because we look at one aspect of the economy, right? By looking at the individuals, right? Small way, right? Particular market. Discuss how the equilibrium is determined, right? And if we come to the macroeconomics, what happens? we take the aggregate, we take all the demands, we aggregate summation of all the demand for goods and services. That is called aggregate demand. And we summate all the supplies, goods and services. Right? That is called aggregate supply. Here we use the ADAS model. Here actually there is a price mechanism. No? Right? This is called price mechanism. Demand and supply for the particular product and particular market. Right? Price mechanism, that's a partial equilibrium analysis. Here we take the aggregate terms, you use the aggregate demand and the aggregate supply. You also equilibrium. Yeah, right? These are the two forces, right? So what is this? This is the price level. This is the income. Right? This is the price level, this is the income. So then determine the price level. This is the inflation. General price level, average. General price level. And the national income. Right? So this is the equilibrium income of the nation. So that actually this model aggregate demand, aggregate supply. Here price mechanism we use, here ABA's model we use. Right? This is partial equilibrium analysis. This is called general equilibrium analysis. General equilibrium analysis. That is called general equilibrium analysis. Macroeconomic analysis is general because we look at the overall economy. We take all the goods and services. In other words, we take all the goods and services and even all the markets we consider. At this equilibrium, all the markets also come to the equilibrium. When we talk about the ISLM model, we can explain clearly this situation, right? General equilibrium analysis taking into account the real sector and the market sector. Right? So this is macroeconomics, right? So here we look at the price of the particular product. Here general price level. Here quantity determine demand and supply. Here the income, right? So that's a micro, and here partial equilibrium analysis. Here the general equilibrium analysis. Tool here we use, what is the tool we use? Price mechanism. Here the tool we use aggregate demand and the aggregate supply. Right? We can identify, right, the difference microeconomics and the macroeconomics, but even though we differentiate, right, anything you can explain in a micro way and macro way. In your research, you can start in a micro approach, right? Or you can do it in a macro way, right? Macro approach. That is your approach. Right? Okay, right? Now, demand. Now, you say, it is a market demand. This is the micro macro. Market demand. This is the micro macro. 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 As some to say micro market demand. After a full market profile, micro, yes, market demand is micro prices. If you take aggregate demand, if you take unemployment, macro, we say the national income, personal income, micro, and demand for the particular product, that's a micro. Coca-Cola price or something like that. And people losing job, likewise, we can look at the micro point of view, macro point of view. Right? So when we talk about the industry or the market, that's the micro. Right? We take all the industries together, all the total supply, that's macro. Right? So the balance of payment, that's the macro. Right? Employment, balance of payment. Right? And also there is in economics, there is another concept is there, stock and the flow variable. Stock versus flow variable. What is the difference? Stock and the flow variable. Economics also we can identify these variable, stock variable and the flow variable. For the variables, right? We identify these two distinct markers. What is stock variable? What is flow variable? Yes. Stock mean now you know opening stock, closing stock, right? Stock variables mean flow variables. Now the stock variables we measure. Now you know opening, closing stock. We measure during a period of time. No? Measure during a period of time. Now stock එකක් කියන්නේ මෙහෙම ගත්තොත් වාදනයකට එකකට එනවා right info එක එනවා stock වෙන්නේ මේක තමයි flow එක වෙන්නේ right මේක stock එක නේ so we measure during a period of time but flow measure at a point no at a point in time specific time right. So stock being we measure during a period of time. Now for an example, income. Take the stock home from. Income. This is stock home for and suppose you say stock variable income. And suppose you say flow variable. Why you say that? Now the income, you know that it's a flow variable. What is the stock variable of that? If you accumulate the income, what happens? Wealth is a stock variable. When you receive income, you accumulate. That's called the sum. And investment. Investment. Stock. And suppose you say stock. Stock variable. Sorry, you say stock. Flow variable. Investment. And suppose you say flow variable. Investment. Now investment is a flow variable. What is the stock variable? Capital. If you make more and more investment, what happens? Capital is accumulated in stocks. So the investment is the flow variable. Capital is the stock variable. Now if you take unemployment, where is the stock for flow? So, unemployment here. And you take the people losing job. It's a flow variable. Once you accumulate it, all of it we get it as unemployment. Likewise, we can identify the in economics two terms, right? Two concepts: stock variables and the flow variable. All the variables we can identify stocks and the flow. So during a period of time, stock variable measure, and at a point of time, we measure the investment. So those are interesting concepts, right? So micro and the macro, right? You know how to differentiate the micro because these are the two branches, traditional branches we identify in economics, micro and the macro. So especially now in our course, we look at both aspects, right? Some here is also some concepts here, micro, and we look at the consumer and the behaviors, how the individual economic agents behave in the market environment, right? So we look at that one, right? Our discussions, right? So that will continue with the next discussions as well. We are going to discuss. Right. Now the economic wealth. We talk about the wealth, right? So income and the wealth. Right? We talk about the economics also concerned about the wealth, right? Of nation, right? It's a matter of wealth of nation, right? So wealth, economic wealth means what is it? Now we have the wealth, like the once you accumulate your wealth, right? So those are there is a ownership, your wealth. You can personally own, right? But how work, likewise wealth is accumulated, right? So, so those are the your wealth, how your wealth explained. What is your current wealth? We have the physical forms and the financial. We have the buildings and the physical, part of your physical and physical. And the financial wealth, we have shares, special bills, special bonds, and deposits, right? Then CDs and your deposits, right? Likewise, different financial wealth also they come, right? So those are the assets, right? Total assets. Assets owned by individuals. So as a firm, right? As an organization, so as a government, right? We have the wealth. So that is called economic wealth. So wealth means if you have assets, it gives utility to you, right? You can maximize your utility, and money value is there, right? And as an asset is limited, right? There is scarcity and there is ownership also. So that can be classified now if you have the household, the personal wealth, business wealth, and the government wealth is all together. And the societal wealth also we can form all together, right? Those ownerships of wealth, right? So that is finally become the social wealth. So that is the wealth, right? Economic wealth, right? And another branch, you may know this, positive normative, right? Can explain the positive statements, normative statements, right? So positive, what is the difference? That is, in economics we can identify this positive economics, normative economics. Positive, normally we explain the current situation, right? Based on the facts, right? Who's feel the one and what feel like that, right? So verifiable questions we discussed based on the facts and the figures. We can test them, right? And verify it. Positive statements, right? So verifiable, testable. Now, for an example, if you take the current economic growth is this much, right? Unemployment rate is this much, right? So, like we can verify it based on the facts and the figures. Testable. Those are the testable things. Right? And that also explains some relationships as well. Right? This and that. That's also positive. Right? When the price level increase, when the, let's say, micro things, right? When the goods price increase, public demand, price of particular product increase, public demand increase. No? That also we can test, taking a sample from the market, no? Right? And then we can take the some survey you can do, no? Right? Questionnaire survey. You can take the demand, how it is varying with respect to change in the price. No? Right? You can collect the information and you can test it. Right? So that means some kind of relationships if you explain. Right? That also coming under the positive. Normally we are doing so much of causal relationship that we explain in the economics. Right? Between the variables, right? We identify the dependent and the independent variables, no? Right? DB and the IB, right? And explain the relationship. Right? So much of theories are there to explain this. Right? For example, growth, right? Growth depends on different factors, right? So maybe the factors of production, technology, right? Human capital, expenditure, investments, right? Different factors. You can test this relationship. When the government expenditure increase, what happened to the growth? When the private investment increase, what happened to the growth? Right? Likewise, you can form the relationship based on the growth theories and so on. So that comes under the positive economics. Now we can say what policies will reduce the unemployment, right? So once we identify the factors that determine the unemployment, right? You can say, right? So we can policy implications we can discuss. Right? So that's a positive statement, positive economic coming under that. In our economics, mostly we do the positive statements, right? Positive. Right? But normative also there, right? So those are the actually we cannot test those things, right? So those are normally explained the ought to be situation, should be situations, right? So based on our judgments, right? Based on our judgments. So those are the opinions or the views, right? Expressed by the various peoples, right? Based on the judgments, right? Opinion. But they cannot, we cannot test scientifically. Right? Now, for an example, the distribution of income from rich to poor will increase social welfare. Right? That's a we know it's good or bad, right? Happen or not, right? That's actually based on the judgment we can say, no, right? Income from rich to poor, right? Now there's argument, no, right? Tax, no, right? Tax policy, why we use tax policy? Now we say sometimes we need to tax from the high income earners, right? Those tax income should reduce to the lower income earners, right? Okay. That is the one argument, tax income, right? Because in order to achieve the fair income distribution, government should impose, right? Government with the tax policy, right? To redistribute the income from high income earners to low income earners. Right? Government expenditure policy can be used to direct income from high income earners to low income earners using tax, right? So that's actually the argument, right? But whether it's happened, right? We say that, right? Right? So will that improve the social welfare? Right? Can the government do this continuously? Right? So those things are there, right? So the normative statements actually those are the value judgments, right? And ask, right? Okay, right? Right. So, we take another 5 minutes, right? You have the time, lunch time to get in, right? Some kind of relaxation before ready to the next. So this is the model, right? So normally this is actually just to give an idea, right? So we use now the models we have, no? Right? Theories we have. We are talking about the theories and the policies also we look at, no? Right? Now the model actually based on the theory, right? We can develop models, no? Right? Now for an example, we demand theory, no? Right? So we identified the theory, then according to the say one law of demand, there is a negative relationship between the price and the quantity demand, no? Right? Based on that, you can develop a model, no? Right? So now the demand theory identified other factors also that determine demand, no? Right? Not only the price. You can develop a model based on that. For example, if you take the computer, how the computer price is determined, right? You can take one thing, the price of the old computer, right? If you take the right? Case or something, Apple computer or something, Apple price, no? Right? Okay. And the other one is the software price, no? Right? You can take, no? Right? And the people, they are taste also some kind of effect, right? They are banned or something, no? Right? The income, yeah. So based on that, you can develop a model, no? Right? That model explains the computer price determine this and that variables, certain variables, we have income, price of the computer, software price, no? Right? And the ASP value price, no? Right? That is the model. So you can test it, no? Right? So then develop based on the theory. No? Your theory explain mainly the quantity demand depends on the price. There are other factors other than the price that identified in the theory. We can test those things, no? Practically whether it's happening. Normally negative relationship between the price and when the income increase, demand increase, whether it's happened here, you can test it making sample, right? And then you can actually, based on the theory, you discuss the policies also, right? Once you develop the model, right? So what sort of policy actions we can take, no? Right? To raise the income level, right? To actually to raise the software industry, right? Like some policy implications also we can discuss, right? And here the base theory is developed two aspects, no? Right? How we develop the theory? Now you identify certain theories to orang melakukan theory kan barat developkan dulu. Bagi kami kemarin like ancient theory, like ancient theory, like what is your name? Java. Java. So sometimes there may be future Java theory or something like that. You invent something. Right? So that means based on the facts, no? Right? Practical things, right? To collect the information and develop a model, right? Your own model, right? And you develop a theory based on that. You identify a certain relationship or something, you innovate something, right? So that means the facts based on the facts, right? We have two approaches, inductive, product, deductive. Deductive means based on the pre theories, test research, right? So you apply those theories and the previous knowledge to explain the practical situation problem. Right? So that means theory applied, right? And we apply the previous theory. We explain the certain situation. Now, if you want to explain the inflation, right? If you want to explain the growth behavior of the economy, we apply the growth theories and based on that we identify the certain variables and we test it practically and we come up with new ideas, right? So that is theory applied, right? So deductively we apply the previous knowledge. We know to explain the current situation. Inductive means other way around. We are going to develop new theory. That is theory building approach based on the facts. In research, you can do these two approaches. You can use either the current knowledge and use or then explain but you can develop a new knowledge as innovations. That is the inductive means innovations. Right? In economics methodology, we can identify those the methodology in a program. Right? Okay. Is it clear? Inductive and the result. Now, in your research, you can say methodology part when you explain whether my approach is deductive or inductive. You will explain in your research. Right. So the theories and model you can receive, right? So I think now we will stop, right? So next day we will continue this one, right? Next day after I start 9 o'clock, 9 right? Is not right. Right. So otherwise time is not sufficient for us to finish. Okay. So if you have any question, so I will get the information from the office, right? Regarding your office, right? Okay. Any question? Is it am I going fast or is this okay no so far? When we come to the other important areas, we need to give same time, right, for that. And we will do those things. Because in here, actually, we have the two aspects, right? One is the microeconomic section and the macroeconomic, right? Covering all the sections, the paper is designed, right? Minor paper, right? Therefore, we need to maintain a balanced approach, right? Micro and macro, okay? Okay, thank you very much. We will meet you next week, right?